But we are in the phase where Bitcoin starts to have the Bitcoin dominance starts to decline. And first, because capital is being attracted into Ethereum, and then we'll see that move. And then most likely, we should also then start to see the large cap coins tokens start to move. And then we'll see, down the road, I think we're going to see also the memes. So in that respect, we are in the most interesting phase. We are in what I've called the blow off top, in where we're going to go exponentially higher. Bitcoin 165, 170,000 easily, as I see it. Ethereum, I think it's around 17 to 20,000. I think we can hit that with Ethereum. So we are in a very interesting phase, and we'll see a lot of that capital start to rotate also later on. So in a good phase.
Henrik Zeberg, the macro analyst, says crypto markets are entering one of their most fascinating phases. Bitcoin's dominance, which had been rock solid during the early stages of this cycle, is beginning to slip. That's usually the first sign of money rotating into Ethereum. When that happens, it often sparks what traders call alt season. The pattern is familiar. Ethereum runs first, then the bigger cap altcoins catch fire, and eventually liquidity trickles into the smaller, speculative names. For now, the outlook is still bullish. Zeberg notes that Bitcoin could extend its rally toward $165,000 to $170,000, while Ethereum has potential targets in the $17,000 to $20,000 range. Momentum is strong, sentiment is upbeat, and if history rhymes, the next few weeks could deliver rapid moves across the board. But Zeberg adds a cautionary layer. The real question isn't how high prices can go, but what happens when the cycle tops out. Bitcoin, despite its growth, has never actually experienced an actual recession. If the global economy tips into the kind of balance sheet recession many analysts are warning about, then Bitcoin may not prove as resilient as believers hope. Zeberg draws a parallel with the Nasdaq after the dot-com bubble. Back then, tech stocks cratered 85%. Bitcoin, which tends to exaggerate Nasdaq-like moves both up and down, could face something even harsher if the bubble bursts. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Well, so we are in the most interesting phase for any crypto fan. I'd say, we are in the old season, in the early phases of, you call it the ETH season. I agree with that. But we are in the phase where Bitcoin starts to have the Bitcoin dominance starts to decline. And first, because capital is being attracted into Ethereum, and then we'll see that move. And then most likely, we should also then start to see the large cap coins tokens start to move. And then we'll see, down the road, I think we're going to see also the memes. So in that respect, we are in the most interesting phase. We are in what I've called the blow off top, in where we're going to go exponentially higher. Bitcoin 165, 170,000 easily, as I see it. Ethereum, I think it's around 17 to 20,000. I think we can hit that with Ethereum. So we are in a very interesting phase. And we'll see a lot of that capital start to rotate also later on. So in a good phase, and what we've been expecting. But here it is. Still some doubters out there. I think it's going to move very quickly higher in the next coming weeks. I don't see Bitcoin as there's any behavior in Bitcoin here apart from the narrative that tells me that there is a new behavior to Bitcoin. I hear the talk of it. And that's what you hear in bubbles. You hear the talk that this time is different, but you don't see it. You see Bitcoin doing really well when the Nasdaq is doing well. That is the correlation between the two is just phenomenal. So I don't see it. I see people talking about it, but as we also started out by saying, all the good things are now on the table. Yeah. I mean, I can hardly imagine any more tailwind to it. Yeah. So would we expect? If I'm right, that we're heading into a major top, and by the way, also the Bitcoin cycle top in a 4-year cycle, right? That we see all of a sudden that Bitcoin breaks out of all of that and starts moving up, or will we see Bitcoin crash? And unfortunately, and I'm not pro or against or anything like that, I'm just saying, I think Bitcoin is going to crash harder than it's done before. And I think that because this time around, you actually get a recession. You get a balance sheet recession. You get a recession we haven't seen before. Bitcoin hasn't seen a recession before, but the Nasdaq has seen a recession before. And if Bitcoin acts like Nasdaq did in 2000, where Nasdaq fell 85%, and we have a bigger bubble this time around, then you can say Bitcoin is outperforming Nasdaq to the upside and to the downside. Why would I expect from what I see right now with the facts on the table, that Bitcoin would outperform the NASDAQ. I don't think it will. Yeah, it will outperform it to the downside, I'm afraid. So I think we got a massive decline coming. I don't hope for it. I don't want to, the discussion with any diehards on that. But I can just say I don't see the writing on the wall in terms of the facts we have in front of us telling me that this time will be different. So where do people go? Well, there's one thing that will be in the need of. That will be dollars, US dollars, because US dollars is where the main part of the world's debt is denominated in. So what happens is that you will see first a suction hole opening up if this bubble bursts, meaning companies will go bankrupt, there will be dominoes effects and so on. You've got a credit events, and there will be a suction effect. And to cover that, that will be needed dollars in order to make sure that loans are refinanced or closed or whatever it is. US dollars. And I know that's not what people like to hear. But the fact is the US dollar has been in an uptrend since 2008, since they started the QE. It's not been in a downtrend, it's been an uptrend. So I'm just saying, I think the business cycle is going to tell us we're hitting the wall soon. Not here yet, still seeing the explosive move in this. Right around the time of the 4-year cycle, I think we're going to see a major top. And I think it's going to create a suction where the US dollar is going to be very, very strong. And for some time, there will not be many alternatives. Yeah, there's probably also a reason why some great investors are starting to say, well, maybe we should get out of risk assets. Warren Buffett is up at 30% in cash right now, which is higher to his assets portfolio than, with cash-wise than he's ever been before. Maybe there's a reason for that.
Henrik Zeberg says the market is currently climbing what traders call the wall of worry. Doubts linger, headlines stir fear, yet Bitcoin continues to rise and attract new capital. That momentum is spilling into Ethereum and other altcoins, creating the kind of broad rotation that typically defines the late stage of a bull cycle. Zeberg believes this can run further, but the real issue isn't inside crypto, it's tied to the broader business cycle. He points out that he wasn't calling for a recession during the inflation spike of 2022, nor when banks wobbled in 2023, or even earlier this year when growth concerns started to surface. However, the signals are now shifting. The US economy is beginning to stall. Growth data is softening and cracks are visible beneath the surface. Central banks, from the Fed to the ECB, are flooding the system with liquidity in an effort to stabilize the economy. Here's the problem: liquidity can't erase the business cycle. Zeberg reminds us that history has already delivered two clear examples. During the dot-com bust, money supply expanded aggressively, yet the Nasdaq still collapsed by 85%. The same happened in 2008. Despite multiple rounds of stimulus, stocks plunged nearly 50% as credit markets broke. For Zeberg, this is the warning. Crypto might still have upside in the short term, but once the recession takes hold, even massive liquidity injections won't prevent a painful downturn across risk assets. The cycle always wins. Let's get back to the interview.
We always talk about that there is we need to see the market actually rising and defeating the doubts in the market and the wall of fear and all that. We hear the talk of that. And that's what we've seen with Bitcoin actually doing, all the, to talk. Now everything is there on the table. And then you see the market move. And it can do that for quite some time. We can see the rotation of it. Bitcoin has been attracting all the capital in. But yes, to me, we are in a different phase. And the top, when I talk about the blow-off top, this is not based on crypto. This is based on the business cycle that I study intensively, which is telling me that we are getting to and I was not there in 22 and saying this was a recession. I was not there in the banking crisis, and that was when we had the inflation spike. I was not there in 23 saying that. I was not there in April of this year saying that. What I am saying is that now we're getting closer. And the thing is that we have an economy in the US that is actually starting to stall. And you're right. We then get the central banks coming in, and the ECB and other central banks have been in there for quite some time. And you could say that's great. And that isn't what we hear every time. We hear that, now they come, they will make sure that things are not starting to unfold in a negative way. But unfortunately, that's not, liquidity cannot stop the business cycle. And again, we just have to, there'll be a lot of doubters to what I say here and say, Henrik, you don't know, and this is different and all that. When I look at it, and you can look in history also, and I have a nice chart I can show you here as well, liquidity cannot stop the business cycle. This is the dot-com crisis, and this is the great financial recession, or the financial crisis. in 2007 to 2009. And here you had the liquidity, the M2 you were talking about for the Fed, the ECB, the People's Bank of China, and the Japanese central bank, also Bank of Japan. And you see how it's rising here. It was not so strong here because also there's a more shallow recession actually we had. But you saw the stock market. It dropped a lot by 50%, and even the NASDAQ dropped by 85%. See, this time we into the financial crisis, it actually rose much quicker, the money supply, but you still have a recession. And the thing is that when the business cycle, which I follow, which is here, you had a signal right here for me, and you had a signal here, and I can show you that as well. This is the business cycle I'm talking about right here. This is from early July. Every time for the last 50, 70 years, actually 70 years, but here we only got 50 some years. Every time my leading indicators has been rolling over, you get a rollover of what is called a coincident, which is employment, manufacturing level, and so on. And I've said a long time that when we get this crossover, and we did that in November 24, that's this time when the countdown starts. If you go back to the financial crisis, you actually had in November 2006, you had the same kind of crossover. The recession didn't start there, but it led to the crossover of the coincident indicator, which was in November 2007. And the recession started then 1 month later. Now we have had this crossover some time ago. And if we go even further in and look at that, we can now see that with the down revisions on the revisions lower of the non-farm payrolls, we now have the touchdown of the coincident indicators, which is the same thing we have seen here, here, and here. And if we go back in time and say, oh yeah, but then they will make sure by liquidity, making sure that this is not going to give us a recession. Well, I think we'll have to face that this time will not be different. So I think, unfortunately, we are in a situation where everybody will think that the Fed can change the rule, can change the path of the economy. And that's unfortunately not how it works. That's the talk of the town. But the problem is right now in the US and elsewhere also is that we have had inflation. We have yields moving up. So people are up to their necks in terms of just paying bills. You can see there is also some surveys on people actually just having difficulties in buying food. Yeah. That level is now at 15.6%, which is higher than into the financial crisis. So this is not a situation where people are feeling good in the US or elsewhere, I have to say as well, because of the high yields and because the US is just still the big brother of the world, that anywhere the US goes, the rest of the world goes. So if you see that, you'll actually see that the real economy is stalling. And we saw that with the job numbers also. They had to revise the May, June, and July, and the July number was also really bad. So if that rolls over, as according to my business model, unfortunately, there's not much we can do. And now we have the euphoria, which we have because liquidity is starting to flow in. The M2, as you correctly said, has been going up. And that will create it until the moment that reality, which is the real economy, unfortunately hits the wall. And I think we are really close to that, which means that the crossover here needs to be confirmed by end of September. And if it does, that's the time to move out of markets, as according to my model.
Bitcoin spiked toward $117,000 before being rejected at a crucial resistance level, according to trader Michael van de Poppy. He noted that BTC needs to establish a higher low between $114,000 and $114,500 to regain momentum and re-enter its bullish range. Ethereum's surge above $4,700 signaled what van de Poppy described as a tear on altcoins. ETH has been leading the Layer 1 sector, attracting capital rotation from Bitcoin dominance into alternative assets. Cycles don't just repeat, they echo, and right now the echoes are loud. Crypto may be surging higher, fueled by liquidity and investor optimism, but the broader economic backdrop is becoming increasingly fragile. The tension between short-term market excitement and looming macro risks sets the stage for a decisive moment. Traders are riding the momentum, yet history suggests that gravity always reasserts itself when recessions occur. What's unfolding now feels less like unchecked euphoria and more like a countdown. Could this be the final explosive push before the tide turns? Or has crypto finally built the resilience to weather an actual economic storm? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the daily updates. Thank you for the support and I hope you enjoy the video.